Okay, and then for this part, I'm going to perform a technical analysis. My financial instrument is a cryptocurrency pair, so it's Solana and Tether. I did a bit of background research, and both of them are relatively stable for the time being. So this is not part of the technical analysis, but when you're trading or investing in crypto, for instance, it's always good to do like a bit of fundamental analysis on the side, just to make sure that you're not going to, yeah, like invest in a crypto asset that is going to crash, for instance, or is not going to be around in like a month or so, because that's how volatile the crypto market is. Anyways, because it's the crypto market and because the crypto market is usually volatile, I kind of had an idea of the type of trading strategy I would want to use. I'm trying to train myself to use like a scalping strategy. So first, first things first, I needed to establish, like what is the trend of the market, so I could also um, establish, like my trade trend, and confirm like what type of strategy I can use. So what I did is that I looked at the market on 1 hour time frame, just to give me an idea, a bit more, like to zoom out a little bit, so give me like an idea of like what is the current trend in the market right now. And then you can see here in this screenshot of the of TradingView, that the market is relatively volatile, but that around this point, I'm able to draw a trend line because the market is moving up. It's bullish. So that's what I did. I was able to draw a trend line. Um, and then I noticed that like around this level, it was becoming more bearish, but then around this level, it was becoming bullish again. And my purpose, since I'm using a scalping strategy, is to take advantage of this volatility and to make a very swift and quick entry and exit, so I can make some profit on the difference of the price levels during my trade. So once that I've kind of established that, okay, like around this time, the market is bullish, so I'm going to buy a stock. Um, and then I'm going to try to sell it at the moment where the market is going to reverse. So then I'm going to move on to like the 5 minute time frame chart. So I have like a clearer picture of what's actually happening in the candles with the candlesticks. And along that, I need, in order for like my technical analysis to be complete and for my trading strategy to be complete, I need to know certain things. So my capital is €1,000. In order for me to determine like where am I entering? Where am I exiting? What is my stop loss and what is my profit target? The first thing I need to know is like my risk capacity. And since I'm using a scalping strategy, it's really important for me to have like a very like conservative risk approach because of the volatility of the market. Um, so it's usually recommended to stick to like a 2% risk on your capital, so that you can also perform multiple trades as well. If I lose €20 out of €1,000, I'm able to perform another trade and take the risk of maybe losing money or winning money. But if I enter my trade and I don't know, I put like 20% as like a risk percentage, I won't be able to perform another trade with the same confidence, and I won't be able to perform that many trades. So once that's been established, that is the risk percentage. I also want to know like what is my risk to reward ratio, and it's also recommended for the strategy that I'm using to have a relatively small ratio. So I'm gonna stick to like a 1 to 3 ratio, which would mean I'll get back to that part later. Um, Other things that I did, I put the moving average conversions divergence indicator so that it could show me the price level movements, and also at the same time the volume. So these little bars here, they represent the volume of people buying and selling at the same time. And then this is the price movement, right? And then this is the signal line. This orange line here, it represents like the time when it crosses over the moving average line, this is the time where the market is going to reverse. So I'm using this indicator to look at good entry points, and to also look at, like, good exit points for me to be able to take the maximum profit. Along this, I'm also looking at candlestick patterns. So for instance, I placed my entry point here because um, this little candle here, the red one, the one that was next to it, all of its body was engulfing it. And this is what a bullish engulfing candle looks like. So it's like a green candle that is bigger than the entire body, including the wick of like a red candle. And it's usually like a signal of a trend reversal. So if I looked at this candle and I also look at the moving average convergence divergence signal lines and how they're crossing here, well, you can't really see it, like my head is covering this, but you can guess that they've crossed like around here. I know that the market is about to reverse again. So then this is like a good like entry point for me. But before I can like enter the market, I also need to determine where is my stop loss and what's my profit target. So if I were to enter around here, I would buy around 130. It's a little bit less than 130,000 US tether. When I did the conversion, the because I think this is it's counted in the tether currency, it gave me around 120 euros. So I know that I'm entering the market around 120 euros, and like my risk to reward ratio is 1 to 3, meaning that I did the calculations on the side. I'm not just like doing them by head. I wish, but I'm not. It means that if my entry price is 120 euros, I cannot afford to lose more than 30 euros. So that would be like my risk to reward ratio. 30 euros is the maximum that I would be willing to lose, meaning that my stop loss would need to be put around 90 euros. And here it was not possible to do it because it would have required for me to like zoom out a lot and take other screenshots. But we're going to presume that in a different setting, had it been possible, I would have placed my stop loss like around like 90 euros, and then that would have been like an automatic exit for me out of the market. At the moment that the candlesticks they reach that point, I need to leave the market because I've like reached the limit of what I can afford to lose in terms of money. The same thing applies for the profit target. You can also set a profit target if you want to, like how much you're going to earn. And then at that point, like you can automatically exit the trade. I don't think it was necessary for me to do that because though the market is volatile, it's really not that volatile. And since I'm scalping, I'm really focusing on earning a little bit very quickly. So it's already 8 minutes. So I'm going to wrap things up. Very quickly, I believe I've covered the most important aspects of a technical analysis and, like the use of like a technical analysis when you're performing a trade. I'm going to wrap things up when it comes to when do I exit the trade? Because why would I not exit it here or here? This looks a bit scary. Why would I like leave it here, for instance? I would do that because of two factors. So I took advantage of the volatility of the market. And then around this time, I can see that like it's first of all, like it's been like a couple of hours and I'm using a scalping strategy. So I cannot afford to stay in the market until the end of the day. That would not, it wouldn't fit with like the strategy that I'm supposed to be using. And I have to stick to my strategy. So I also see that like, okay, like around this time I've been in the market for like long enough. I also saw that the volume of like buying is like, it's going really, really low. You can see it here. And I also see that the signal line is crossing over the moving average line, meaning that there's going to be like a trend reversal. And then at the same time, I see that around here, the support line has been tested. Maybe I don't want to wait until it gets tested again and like the yeah, like around here, like a bit later around here, it would have been like problematic. Though, like I'm still, if we're looking at like the stop loss, my theoretical stop loss, like I'm still fine for the trade. But because like around here, I know that there is like an upcoming trend reversal. Like now I can see what's happening, but if I was not aware, if I could not see this part that's like happening here, I would not want to like take this type of risk where I see like around here, yeah, like I'm able to see until here, and I'm able to see that, yeah, like the selling volume is really low and there is like another trend reversal, and maybe it's going to be like even deeper than this one. So then I would exit my trade around here. I would have like sold um my currency at a little bit under 140, maybe like 138 or like 139 USTD. Exited the trade around here, and I would have made like a couple of euros of profit on like the buying price and then the selling price. I bought it at 122, remember? And then I sold it. Well, actually, let's just use the same currency. I bought it at like 130 USDT, and then I would sell it like at a little bit under 100 if I exit around here. Yeah, around like 140. So that's kind of like a 10, I want to say 10 euro. It's like a 10 euro difference. And that's good. Like, for instance, imagine if I bought like multiple currencies. This not just like one little trade. Imagine if I did this on like a scale of like 100. That could have been like a 10,000 euro profit for me. So yeah, this is the end of my technical analysis. It's a little bit messy. I apologize for that. I'm not very comfortable with this part yet, but I'll get there. Thank you. This is the end of my assignment.